Welcome to the Stockscores Market Minutes for May 23rd, 2014. This week's message is to trust the market. You see, the market prices in all information that investors have. Every time an investor makes a trade, they are essentially casting their opinion using the information that they have. Do you have all of the information to make the right decision? Well, do you consider yourself to be more knowledgeable than the thousands of investors with the millions and billions and even trillions of dollars that get placed in the market every day? You may know a lot about a company, but missing out on one little detail can make the difference between a profit and a loss. It's important to learn to read charts so you can understand the actions of all investors and the information that they have. Here's a chart of Bankers Petroleum, and there's some simple concepts that help you read the chart. The first is that falling tops are a sign of pessimism. Here you've got tops that are falling over time, and that is a stock situation that you want to avoid. As time progresses through the middle of the chart, you can see that the bottoms begin to rise. That is a sign of optimism. Now, this horizontal red line that I've drawn here represents the upper limit of what investors were willing to pay for the fundamentals of the company. And for 8 or 9 months, the stock traded in a narrow sideways trading range until this week, when the stock was able to break through that ceiling price from optimism and from low volatility sideways trading. That break on that particular week was caused by investors that had new information that gave them justification to pay a higher price. And that is why this stock then is able to go into a market-beating upward trend. You don't have to know a lot about companies. You simply have to know how to read the actions of the investors that know most of the information. All right, let's get into this week's market analysis. An important week because for the first time, the market closed at a new high. You can see over on the right-hand side, and this is a weekly chart, the S&P 500 ETF closed above 190, and that is a new closing high. It is a breakout. Now, admittedly, volume was very light this week because American investors looking toward their long weekend, but it is still an important turn of events for the market and something worth noting, and it puts the market back in a bullish trend. The TSX is also in that bullish trend. You can see rising bottoms consistent since June, July of last year, and this week on the strength of strong bank earnings, the market was able to move higher. It has not closed at a new closing high yet, but it does look like that is likely to happen soon. TSX Venture broke its cycle of falling tops late last year and built some rising bottoms through January and February, but since then it has been drifting lower. Not dramatically so, but certainly not showing much excitement here. So this market is on the slightly negative side of neutral. The Treasury bond market in the US has been hot for the last few months, but it is now hitting resistance at the downward trend line. And this week, Treasuries closed below their open. It looks to me like we may see Treasuries roll over here with falling prices, meaning interest rates will tick higher. Now, interest rates are very low. They're hovering around that 2.5% mark in the US, but look for perhaps that to rise a little bit in the near term. Now, the US dollar bounced off of support 3 or 4 weeks ago, and this week broke the little short-term downward trend line that had been in place for 4 or 5 months. That is a slightly bullish sign for the US dollar. I wouldn't consider it overly bullish, but it does look like the predictions of a weaker US dollar have not fallen through, and the market is holding at support. The gold ETF GLD is in a longer-term bearish trend. You can see the falling tops on that. Now, if the market were able to break that downward trend line from this rising bottom that has been building, that would be a positive sign. It would break the pessimism of gold investors. However, if you look over the last 3 months, you can see that we've actually got falling tops inside that little pattern on the gold market, and that is pessimistic. So On the balance of probability, I would say gold more likely to go lower, and I would not be a buyer of gold, or more than likely the gold miners, except for maybe a few exceptions, unless that downward trend line can be broken. Oil is in a long-term sideways trading range. It is at the top of that pennant pattern. We call that a pennant. The bottom's rising, the top's falling. You can see the strength of the last few weeks takes the market up toward the top of that pennant, where likely we will see some resistance. So look for some of the excitement in the oil market to cool in the near term, although we could see a breakout of this pattern, and that would be bullish for oil. The VXX new all-time lows again, and really fear not a factor in the market right now. All right, so my ratings then: bullish on US stocks, both short and long term. The same can be said for the Canadian market. Gold neutral in the long term, because we are trying to break that downward trend line, but in the very short term, we're starting to see those falling tops building again, so I'm bearish in the short term. Oil neutral on both accounts. Oil's actually done very well lately. I just think it's going to run into some resistance. US stocks made a new closing high this week, breaking out on light volume. The Canadian market also enjoyed strength, setting up for an early summer continuation rally. Gold is starting to show signs of a short-term breakdown, and I advise caution. Oil has been strong, but is now at resistance where selling pressure is likely. That has been the Stockscores Market Minutes for May 23rd, 2014. Have a great week in the market and trade well.